Hey y'all! Today I wanted to talk to you about the different types of loans. Now, I am not a loan officer, so I am therefore not an expert. However, I do know quite a bit, and I will share that all with you today. So, if you are looking to buy a home, and the first thing that is recommended is to get pre approved through a lender. And so you give them your information, and then they start talking about different types of loans. And it's like, different types of loans? What the heck does that mean? So there are different types depending on, they all have a little bit different criteria and requirements. So the first one that I'm going to talk about is a VA loan, and that is specifically for military personnel, whether you're a veteran or still active duty, you can use a VA loan. And so that is the main requirement of that. The another type is called a USDA loan, and that is specifically for areas that are a little bit more rural. And so there's all kinds of maps and things like that to figure out if the area that you're looking to buy a home could fit that criteria. There are also income requirements on that. So you'll have to work with your lender and see, figure out the nitty gritty. Another type of loan is an FHA loan. And so that is backed by the federal government. And so they have certain criteria. Typically, that used to be known for their really low down payment. So that used to be 3 to 5% down, which was typically lower than a conventional loan. But that is not the case anymore. And a lot of times. So then another type of loan is a conventional loan, and that is pretty much any standard loan that is not backed by the federal government and doesn't really meet any of those others that I have spoke about. Um, Back when that used to be like, okay, you had a minimum down of 20%. That's no longer the case. There are a ton of conventional loans that can go down to 3%, 3.5%, 5% down. So a lot more people will do in conventional loan because of that. And another type of loan, this is more on the investment side, is called a hard money loan. And so that is pretty much a group of investors has gotten together and said, hey, we'll loan you money for super short term. I'm talking like 6 months to a year. And that is usually to buy an investment property, do some upgrades either to the structure or, maybe find up the rent, whatever it may be. And then they get paid, they refinance and pay the hard money lender back. So that is another type. And then there is one more type that is super short term, and that's called a bridge loan. And a lot of people can use that if you are trying to sell and buy. A lot of times our finances don't allow us to buy and own two homes for a short term and then sell and then put all that money that we received from the proceeds from selling our first house into the second one. So a lot of times a lender will be able to approve you for what's called a bridge loan. And so they agree to help you buy first with the intent of selling. And so there are specific requirements, specific situations. So you'd have to specifically talk to a lender about that, but they do exist, just so that you know. So again, if you have any questions about lenders or types of loans or some more of the general requirements for any of them, reach out. Happy to help, happy to have that conversation and help you get in the right direction.